Welcome to Alpha Bytes. I'm your host, Marconi White, and we've got a show so hot, SBF pleaded not guilty in the hopes he could get out of jail to hear the show live. I'm going to ask the guys which account they're aping on friend.tech, but first, JJ paints a pessimistic picture for BNB chain. Ben decodes the language of the central bank mafia to find a potential market top. Ray's studying the Bitcoin RSI print to find a historic pattern. And King Cody, well, he's got 3 gem projects to like or spike, including a Liquid Lab doing a copycat of Uniswap, Spanish footballers kicking Web3 around, and Curve Finance throwing a curve ball to the rest of DeFi. And much, much more. I've got Ben Lilly, JJ, Ray, and Cody in the studio. Gentlemen, welcome. We're going to kick it off with the market update. But before we do, now, if you're a bear market warrior who has ideas on what the industry needs most, we want to hear from you. So please take a few minutes to click the link below and answer a few questions that can help us better tune our content for you. Now, let's get on with the show. JJ, I want to kick it off with you. We're going to talk about a market update. Over the last couple of weeks, you've been warning us about this incoming volatility. And if you don't believe us, listeners, go look at our thumbnails. It was all over it. And now it looks like, as I look at the market today, we're sitting at about 25,836. So tell us, is the rocky road over?
I think it's just beginning. So as we see, volatility had a big breakout, like we've been discussing over the past few weeks. It moved up almost 100% in basically span of a couple days there. And that's kind of what happens when you have a rising DXY, right? Liquidity leaves markets and these order books become very volatile. Price moves up and down. The best example of that was last Thursday when we just saw a massive liquidation cascade all the way down to, I believe it might have wicked as low as 22,000 on a few exchanges there. Derivative options traders, people that were naked selling put options, they really got squeezed out pretty harshly there. And not coincidentally in my mind, it happened just as DXY broke out above its 200-day moving average. So that's another thing we were discussing last week is like, watch out, the dollar gets hot, things can really break in crypto markets. And that certainly came to pass last week. Adding kind of insult to injury there is that the whale wallets that we were hitting on earlier this summer, they have been selling nonstop for now 2 weeks in a row. So that's kind of forming a new trend. Additionally, we see Bitcoin broke down below its 200-day moving average. It lost its 50 RSI support on the weekly chart. And those are 2 trends that it's rode up since it was at 18,000 in January. So basically, the entire move up from 18,000 to 31,000, 32,000 or so, we were riding that 50 RSI mark on the weekly chart and the 200-day moving average. So not even the crash in March was able to obliterate either of those. However, this past week, we saw that reverse pretty harshly. So I think if there's any hope for BTC to avoid going back down below 20,000, it would be it reconquering that 200-day moving average and 50 RSI into the monthly close of August, if not in very early parts of September. But kind of the longer it is below those ranges, the worse the prospects are for downside there. So it's very much on a shot clock in my mind in terms of how quickly it's going to need to move up from here. And now that I've painted the bleak picture there could be a bit of there could be a bit of silver lining. So we've seen negative funding basically since last Thursday for prolonged stretches of time. So that's hinting that there's some juice to the upside, which could provide a squeeze. Additionally, the dollar's looking extremely overbought on its weekly or its daily chart. It's reaching levels that it hasn't seen. There's a pretty strong bearish divergence on there. So it's actually below its early July highs on the price chart. So it's below where the July price was, but on RSI, it's well above that, almost 50% over. So typically that'll lead to some kind of reversion. And if the dollar slips from here, we could see Bitcoin bounce and squeeze out some of these late shorts that have been in. Conversely, Bitcoin's down at the lowest levels it's been since March 2020 on its daily chart. When you look at RSI and the fact that it's still above 25,000, considering that is impressive. And I believe that tees it up to something Ray would like to hit on in terms of the RSI and deviations there. So.
Well, we're going to get to Ray in a minute here. So you did paint a fairly bleak picture with a little bit of optimism at the very, very back end. I guess the first question for you, does this period and what you're seeing in the charts, does it remind you of any period you've studied before?
No. So the dollar breaking out, like, here's what I'm looking at right now is the dollar seems like if it goes above 104, that's kind of where I just see things completely breaking. I think at that point, like it's going to be so overstretched on time frames that it just kind of gets, I could see it going into a parabolic move there. So maybe like 104 to 107 just in a matter of days, right? Which is a very big move for something like the dollar index, which like a 1% move over the course of a day is a huge move. kind of the longer it stays overbought on these levels, the more risk there is of that kind of scenario playing out. So I would really want to see the dollar fall back pretty quickly here, preferably into the monthly close out the month of August below, its 200-day moving average, preferably below its 200-day and 100-day, 50-day. And that would provide some relief, and it would kind of give the feeling that this may have just been a long squeeze, right? There were so many liquidation levels that were hit the past Thursday that if the dollar were to revert from here and we would see Bitcoin kind of gain some stability back over, say, 27,500 or so, in that scenario, I could entertain the idea that it was just simply a liquidation grab, right? Mm-hmm. But until we see that, I'm not in a rush to call that until it plays out. I think the possibility's there, but you have to wait for the confirmation. But as long as the dollar's still moving higher, especially if it gets up above 104, at that point, it's risk off. You can't fight against the market in that scenario.
Yeah, don't want to fight against the market, against King Kong dollar, or the dollar wrecking ball, I guess, is the other meme that goes around.
Exactly. And ultimately, that will provide the buying opportunity that will provide if we get that kind of crazy blow off top from a dollar. It would be similar to March 2020 type entry, where markets just kind of, you might even see sub 10,000 Bitcoin. We don't know.
Yeah,
but things could get kind of that crazy.
Right. So for those who've got some dry powder on the side, they can be looking for some opportunities. Ben, I want to ask you: are you seeing the same data in the tea leaves, or do you have something else that's contrary?
It agrees mostly with JJ's saying. I mean, right here, I think patience is going to pay dividends. We look at some of the options data, and similar to how negative funding alludes to a lot of shorts entering rather late, there's this measure called Delta 25 skew, which hints at the same thing. When it goes negative, it tends to indicate that there's a lot of sentiment that's starting to short on the near term. But on the long term, we don't really see that unfolding yet. So usually you want to see it on the long term as well to kind of help us gauge that we're at that kind of bottoming out process. So I wouldn't necessarily say this is the time, this is it. I think on the volatility measures, we didn't really see much change in terms of long-term volatility, just on the near term. It's almost coming back to what it was prior to what we saw last week. So patience, I think, is the game still, and wait for the data to really give you that the entry point that you want.
Okay. All right. So there you have it, folks. I mean, it's a bleak picture unless you got dry powder, and you may have an amazing buying opportunity coming up. And then what do you guys think the next couple of weeks? I guess if JJ, you're saying by the end of August, we should have a fairly good level of confidence on where we expect this to go next. Is that right?
One way or the other, I see by the second week of September us having some decisiveness in the markets, whether that's Bitcoin reclaiming the 27,500 range and the dollar falling back to 100, sub 100, or obviously the dollar just accelerating from here and Bitcoin going to the downside. I don't really see it hanging out. I don't see us kind of hanging out in this range for very long. I think this is kind of like a break in between the waves of volatility, and I think there's just plenty more of it coming down the pike.
And there's so many speeches on deck for central bankers. The fact that you're looking at the DXY kind of alludes to where it might originate from.
Mm-hmm. Yep.
Okay. All right. Well, for all you out there listening to this, I suggest you check in next week and the next couple of weeks to continue to monitor the situation. And if you haven't already, if you're enjoying getting something out of this content, be sure to hit the like and subscribe button, because we want to bring you back and definitely let you know when video's up and running. I'll give an update at the end of the episode on that. It's always a funny tale. All right. I'm going to go over to you, Ray, because I think you're looking at some data that may be a little bit more optimistic, more from a buying opportunity. So why don't you walk us through what's on your radar?
Well, I must be the idiot in the room because I already aped. I aped pretty heavy on some corn and ETH on the lowest part of the wick down last week.
Just bite your mouthpiece and hold on.
Exactly.
I love to hear the confidence. Well, tell us more. What made you want to ape into those positions?
Well, I did this because usually these sharp cascades, these liquidation cascades to the downside, they have a nice little snapback and then they dump some more. So that's always like a quick little bounce trade and then leave as price encounters, the top of the previous wick on the 4-hour time frame or on the 12-hour time frame. And, day traders will flip short and ride it down further. And those that are holding on to their dry powder will probably have their second, third, and fourth ladder order down below, so they're getting filled on the way down. I don't know if that's smart, not trading advice. I know some people would excoriate me for saying that, but hey, everybody has their own strategy. If it works for you, do your thing, right? Yeah. But historically, And the time that I spend, whether it be days or weeks, waiting on more downside, are usually followed by like expletive moment as price roars back when I'm away from my computer, and then I miss out on the deepest part of the discount. So I've already deployed more funds, lads.
It's not the worst thing. Like you look at, pre-halving when price dips below that 200-day moving average, like it doesn't last for long. Granted, back in
Actually, I
2020,
beg to differ. It does.
well,
On
Mark,
the charts, it does.
20, right? Patience is hard sometimes, right? But in 2020, it was a bit of an anomaly, and we all know the reason behind that. But outside of that, it didn't last more than 4 or 5 weeks. I don't think ever.
And I think that that setup that you're alluding to, right, is there. Like we were saying, there's negative funding. The dollar is extremely overbought. So that fuel is there for them to squeeze it back to, over 20, who knows, even over 30,000, right? Like if you think if Bitcoin was to make a move into parabolic ascent, it would be preceded by an event like we just saw, where you just take all the easy money liquidations that are just been hanging out, stale longs from June. You clear that off, and now the upside is kind of cleared, but we need to see that follow through at some point. So I'm just waiting for kind of the first signs of weakness from DXY or strength from Bitcoin for that matter, because for as many short liquidations as there are overhead, we still haven't seen that move. So maybe they're still piling in. But it's just kind of on a shot clock in my mind. Like if it's going to happen, it has to happen pretty rapidly here.
Well, Ray,
Yeah, I agree. This is an instance where when you're looking at what's happening with Bitcoin price action and then, the ripple effect of that across the market, it is a lot of externals that are non-crypto specific that are going to impact which direction price takes and what traders are going to do. So everything that you said in your piece about Jackson Hole and, are we going higher for longer and all that is going to play a role in the price action. But I guess I should talk about the positives, right? There are a few positives with Bitcoin on the longer time frame.
Yeah. Ray, bring a ray of sunshine to the show, okay?
All right, let's do it. So when Bitcoin crashed to 25,000 last week, my trading view alarms went off. And at that price level, the oversold RSI was the first thing that I looked at because I have alarms set for that and for certain price levels. So I went and I looked at the RSI and I noticed that it was only in 2015, 2018, 2022, and now August of 2023, where the RSI on the daily time frame was trading below 20, which is deeply oversold. In my view, the chart doesn't lie. So you can go ahead and line up those sub 20 RSI events with the daily chart and see what happened down the road. In my view, it's a deep value generational buy opportunity, and these rarely present themselves. So do I expect more downside? Yes. Do I think Bitcoin is in accumulation territory? Yes, I do. Other things that I thought were interesting were the drop to 25K. It knocked Bitcoin one standard deviation from its mean price. And generally, I try to buy core assets when they drop 1 or 2 standard deviations from their mean price. Whether it's a momentum-based trade or a mean reversion or a go long or even a 2x long investment with leverage, price falling far out of its range, especially for Bitcoin, has always been a really good buy signal. So I'm personally excited about this range. I do think there are some red flags, which risk-averse, capital poor, and over-allocated or degenerate gamblers should pay attention to. Like JJ said, price is below the 200-day moving average for the first time since January. It's always hard for Bitcoin to flip the 200 MA to support. It takes forever. And when we close under it for too many daily closes, it's a hassle to get back above it. So losing the 200 MA tends to mark a trend breakdown and some alteration of the market structure on a higher time frame. I also noticed that the structure of consecutive bull flags and the ascending trend line and the trend of daily higher lows on a daily time frame was broken by this drop to 25K. So I see immediate support at 23.6K. That's where everyone's waiting to buy, just based off of what people are saying on Twitter. And if that breaks, then a bounce off the golden pocket at the 61.8 fib, around 21,800, is a structural support that dates all the way back to July of 2022. So below that, barring some sort of crazy macro event or a crypto event, we've got 19K as the line in the sand. Do we go there? I don't know. Nobody knows. But should one throw out some stink bids on like wick wild exchanges like Kraken and Binance? Why the hell not?
Yeah. One thing I want to point out that you have a strategy in place that you're following. And I think for any of the listeners here, that above anything else that we're saying in terms of the data, you have to have a strategy that you have in mind and you follow that strategy through, which includes having stop losses and having ways of managing your risk, but also looking for those opportunities. And so, when you started this off jokingly, well, you must be the crazy one for having bought. I would argue the opposite. You have a plan in place and you're already executing on it. So I think that's actually pretty positive.
I'll jump in and say I have too. Just a long-term kind of dollar cost averaging approach. Like we've broken 200. Like that was my signal 6 months ago to 9 months ago at this point, and it's here. So I might as well get started in my approach, just to be clear and transparent.
All right. So we've now gone over the negative side, or the dark side, with JJ painting a very dismal picture. Ray is showing what you can be looking for with a more, I would say, an optimism kind of viewpoint, which I like. And I think for any of those people out there listening, you really need to have a plan in place. What we're sharing here is our analysis that you need to be able to digest and figure out where does it fit in the way you want to approach the market. So, Ben,
there's one last thing I'd like to add in there.
Well, the producers are going to come for you. But, JJ, you got 30 seconds.
Just to underscore Ray's point about the 200-day. So what we saw in January when Bitcoin first broke above the 200-day, huge spot volume came in at that point, and that's Bitcoin rode it up from around 18,000 to 25,000 in about a month. And then again in March during the crash, we saw huge spot volume come in at the 200-day again. It was around 19,000, and then obviously rode it up to 30,000. So if we do get a retest of that 200-day moving average, what we would really want to see there is a huge surge in spot volume, which has been non-existent since March, and really break above that with strength. And at that point, all that bearishness I threw out earlier, just erase it from your mind, because we're in a full-blown bull market if that happens.
Yeah, that'll be a sign. Can I ask you to clarify something? When you're looking at spot volume, is that aggregate like across the entire market, or is that at a particular exchange?
Yeah, aggregate, just across the market, just spot
Where's
volume.
the best place for chart people to go find that?
You could see it on CoinAnalyze, Velo, a few different data outlets for that. I'll send you some links.
You can even just put it in your trading view. There's an
Trading
indicator for it for aggregate volume.
All right. We got the dogs and the producers are whining that we have to move on.
Move along.
We want to hear from Ben Lilly. No, I think this is really good content for everyone out there who's trying to figure out their trading strategy in these unprecedented times, if you will. Ben, let's move on to what you're looking at. I joked before that you were looking at the mafia, the central bank mafia. I'm not sure it's quite that nefarious, but walk us through the data that you're looking at, because I think it's a little bit more macro.
I mean, if you view fiat currency as a Ponzi scheme, this is the absolute top of the pyramid, if you will.
All right.
But so the SDR interest rates, that's what I'm looking at today. They predicted the last three tops in the S&P 500, and that's why it's currently on my radar. So, so one of the most obscure areas of global finance is what I delved into, and the reason being is Jackson Hole Week. For those new to macro, the Jackson Hole Symposium, it's a monster event. So if you have a ticket, then it's a good chance that you're a central banker or a higher up at the World Bank, IMF, or Bank of International Settlements. So most of the discussions, they're not aired. But one thing I do like to watch out for each year are the academic papers that get submitted to the event. They tend to help us narrow in our focus on where any cracks might be emerging in the global economy. Last year was no exception. One of the papers discussed the issue of quantitative tightening, aka QT, and the time deposit issue. It's just a fancy way of saying that if you want your money that's sitting in your savings account, but the bank puts your money in a time deposit like a treasury, and that treasury does not mature for another couple months or even years, meaning your money is actually not even there. Right? That's that time deposit issue. So this is the Silicon Valley Bank issue that came up about 5 or 6 months ago. So those papers alluded to that event taking place. So it's even why right now when rates are rising, that banks want very short duration instruments like 4-week treasuries. They don't want to tie up their capital for 10, 20, 30 year because they might not meet their customers' demands. And if they can't meet the demands, then they have to sell the bonds at a discount and maybe not have enough assets to go ahead and meet those requests from their customers. It's scary stuff, but again, one of the papers alluded to it. So this year, I'm curious what's on the mind of the bankers in the year ahead. Now, while diving into all of this global banking data and all of the talk happening from those institutions, because it's Jackson Hole Week, I came across the SDR interest rate. I've seen it before, but I've never really dug into it. And a few things that really caught my eye here that I would like to share.
So Mr. Wong comes in here and gives us a whole breakdown for the macro stuff. It is a very big week, and that is extremely scary. I think for all of us listening, and now I'm very curious, what are the SDRs and what is the impact here?
Yeah, so SDRs, we should hit on that first. It's a basket of currencies. It's made up of the US dollar, Japanese yen, euro, the pound, and the Chinese renminbi. The main thing to know here And it's kind of funny when we think about what I mentioned at the start, is that the SDR is a reserve asset for reserve assets. Sounds kind of wonky, but that is what it is. Its purpose is to reduce global volatility in the markets. And what's interesting here is you can exchange them, lend, borrow. It's an asset that is really just for central bankers, which means the asset has an interest rate just like other reserve assets. And it's set up using a basket-like approach of interest rates of the countries whose currencies are represented in that basket. So I named 5 different countries. So the IMF takes a weighted average of those countries and determines what that SDR rate will be based upon those figures. And the reason why I'm mentioning all this right now is that when it starts to decline, we need to pay attention. The last 3 times it did so, it coincided with the peak in the S&P 500. This happened at the end of 1999, right before the dot-com burst. Happened in November 2007, right before the 2008 crisis unfolded. And then around late 2019, for anybody who remembered, the repo market blew up on its rates back then.
Okay, so I'm going to ask the question everybody wants to know. What's it saying now?
Well, right now it's just saying that the rate of change is slowing. It was increasing rapidly. Remember, it's taking the U.S. federal funds rate into account, among other countries. And so that the rate at which the U.S. was rising was a major factor in this measure's rise, but it's now slowing. And we want to see what's happening moving forward. And with Jackson Hole taking place, I have to imagine that this might be touched on. A few other topics that we should take note of is they're going to discuss higher rates for longer narrative. I don't imagine all countries are going to go ahead and be able to do that, which would then signal that the SDR is starting to top out. And we would want to keep an eye for when it starts to decline, because that would be risk throughout the global financial economy. One other thing I'd like to mention, though, is for Jackson Hole, anybody taking note, is I do expect crypto to be on topic because the IMF did meet with the G20 earlier this month, and they wanted to coordinate on crypto policy and regulations. So I'm very, very curious to see if that comes up here at the end of this week.
Ben, you just gave us, I think, yet another signal that would paint a fairly bearish picture. Is that an accurate assessment? I mean, if you're seeing that this is slowing and going down, and the last few times this marked a top of the S&P 500, do you think that's just adding more ammo to the bears narrative?
It will. But with TD's article, he kind of gave the checkup on the health of the economy, and I pressed him afterwards on when do you think this is going to happen? What's the timing? And consensus is it's not tomorrow, it's not next week. We should be thinking on the months time scale, maybe not quite past year. So it is starting, this window is starting to come up on us. And what happens prior to that is going to be very interesting for asset prices. A lot of times you get the melt up, and we don't know how banks are going to respond. I mean, if they start putting in more liquidity, that bounce is going to be like nothing we've ever seen.
Right.
I don't think that's a coincidence that all that lines up with the dollar going on this tear over the past 4 weeks or so either. I think you're just seeing these confluent signals kind of across markets right now. And as people typically say, Bitcoin, crypto in general is the fire alarm, right? Mm-hmm. So maybe what we saw last week was just a hint of what's to come for the S&P into September.
Okay. So, Ben, we're just out of time here on your radar. I guess I want to give you the final point here that you'd want to share. What kind of narrative are you looking to come out of them or out of out of these discussions happening in Jackson Hole relative to crypto? Do you think it's going to be neutral, bullish, or bearish?
I think it's going to be a little scary, to be honest. I don't think we should be too optimistic here. They have a massive productivity issue with advanced economies. They've mentioned it last year. They're mentioning it right now. And then they want to hold rates at this higher level. You just can't do it. That's just not how, you can't have your cake and eat it too in this situation. So where are they going to go ahead and give? And it's got to be liquidity. And I'm looking at this SDR. They did an airdrop, if you will, about a year and a half ago. I would have to expect they do more of that just to keep certain economies afloat.
Scary times, interesting times. I see everyone in the chat here putting a bunch of comments on. Cody, I'm going to give you 30 seconds, even though the producers are going to give me hell. You want to add something here?
Well, it was more of a question to Ben, because looking at the peaks in this SDR interest rate, it seems to coincide with unwinding of an inverted yield curve, which also typically signals a coming recession. And it's every day that he mentioned is exactly when in the past an inverted yield curve has started to unwind. And if you look at the move in interest rates this past couple of weeks, that might be starting right now. So I don't know if you saw the same, Ben, or like if you have anything else.
Yeah, it's the yield curve is unwinding. They've mentioned that they've wanted to do that. They're issuing a lot more debt at that long term, and that's going to help solve that inversion issue that we mentioned. But what always happens is there's only so much liquidity in the system to go ahead and accommodate that increase in supply. You're just dropping into the market. And so that's why I have to imagine these inversions pair up with these crises, is that liquidity starts to dry up. Granted, the Fed does have the reverse repo, almost $2 trillion sitting there to combat this. And so they are more prepared. It just really kicks the can down the road more than anything.
Feels like the same narrative we've been hearing a while about kicking the can down the road on tough decisions. So I would imagine we're going to have to bring this back after we get some of the information coming out of Jackson Hole. Is that right, Ben?
I'll be digging into them. It might take me a week or so to go ahead and read all the papers and kind of let the thoughts show up, because getting older and not as sharp as I used to be. But I'm sure I'll bring this back up on topic
All right,
soon.
you're going to bring it back. Good. Well, I, like everyone else listening, want to understand when the market's really going to start to churn and what the data is saying. So definitely look to bring that back. Cody, we're going to move on to you. We got some like it and spike it's, and we got 3 of them. Are you ready? You just came out of your slumber. We heard from you. Are you excited? You ready?
I am. Hit me.
All right. First one, Osmosis upgrades to Uniswap V3 style liquidity and changes Osmo token economics. Like it or spike it?
Spike it.
All right. Tell me why you want to spike it.
So, there are some improvements, but I think it's just too little, too late. This change to Uni V3 liquidity, it's an improvement on the previous system that they had before. It was like simple Uni V2 style. And now, yes, it's greater liquidity, like greater efficiency and whatnot. You need less TVL to keep the same volume or like even increase the volume. But it's just, they are not innovating. Like this solution has been out there for months, even years. And Uniswap is coming with even new improvements as other smart contract platforms on Ethereum and other EVM chains that are coming up with new solutions for DEXs. And Osmosis, which is supposed to be the flag bearer of DEXs in Cosmos chain, in Cosmos land, like they are not improving at all. Like they're just straight up copying Uniswap V3. And they also have announced another improvement to their tokenomics, which basically they just reduced the inflation rate by 50% and extending the emission timeline. So it will take some more time for the tokens to be deployed, to be emitted to LPs and stakers. But they haven't really changed the token economics of the protocol that much. They moved some of the rewards from LPs to stakers, so you're not incentivizing predatory liquidity as much in a sense. But yeah, it's not the chain that Osmosis needs. If you look at the price and the TVL drop that they had since the peak of the last bull market, they need to do something drastic, and this isn't it.
All right. So some big changes, but nothing drastic enough to really change your opinion on them.
Yep, correct.
Okay. All right. Well, that's a spike it. The next one I'm super excited about because it plays into something I love, the most beautiful game in the world. FC Barcelona announces new strategic partners for BARCA Vision, its digital blockchain initiatives. Like it or spike it?
Like it.
Love it. All right. Tell us more.
So FC Barcelona, as you guys probably know, is one of the biggest football clubs in the world. They have like 350 fans. They have $1 billion in revenue last year. And they are they're going into Web3 and NFT and all the jazz. They are partnering with a couple firms that will provide $120 million euros, in funding for this new Barca Vision initiative, let's say. And yeah, they are trying to partner with Disney, Sony for content creation. They are launching NFTs. They already launched a couple collections. One of them is working with an NGO, and they are using the proceeds for cleaning plastic from the environment. They launched they sold a couple NFTs on Sotheby's. They launched the BAR token through Chili's /Socios. this last one I'm not such a big fan of, but that's for another day. But
Can't do everything, right?
Yeah, exactly. But yeah, they are trying. The issue is I don't know if they're gonna go through with it all the way, because they are also trying to launch or like they are to go public, and they were trying to go public in the US markets, as far as I know. And all things related to NFT, there's no clear rules about it. It's not clear if they would let them launch if that they're making such a big push. So we still need to wait and see how this develops. But yeah, it's looking promising.
Do you think that this could be a catalyst for other, I guess, real world brands to embrace Web3?
Yeah, absolutely. I think it's coming. Like there will be a market. Like there will be a market for luxury brands on Web3 and whatnot. Like I think it's still gonna take a while, and like the people are just trying to figure it out. But yeah, in the years to come, a lot of brands, football brands, a lot of media personalities. We're already seeing something like that with friend.tech, which we're gonna talk about later, I think. So yeah, I think it's just coming soon.
Well, exciting to see. I'm a big fan of the Premier League, so I'm curious whether Arsenal, Man U, or Manchester City will be the first to embrace this. We will see. We'll have to bring you back to talk more football, soccer. That's for another
Chelsea.
day.
Hopefully Chelsea does and turns the boat around. I used to love them as a kid, and now they are not doing that great. So hopefully,
I won't shame you publicly. I'll just mention that I won't shame you. I think that's enough to say about Chelsea. All right,
what can you say against Lampard and Didier Drogba?
We'll come back to this one at another date. All right, we got the last one here. We got CRVUSD crosses 100 million in circulating supply. Like it or spike it?
Like it.
All right, break it down.
So everyone's been talking a lot about Curve, us including, and for good reason, I think. But they've also been innovating quite a bit, and I think people are not really paying close attention to what they're doing. And one of the main initiatives that they have is this CRVUSD, which is a stablecoin. It's similar to that, like you put up some collateral and then you mint the stable, but the main change is that they created a new AMM that is charged with liquidating any position that has to be liquidated. Basically, right now for DAI and most stable coins, there is a threshold where your position is liquidated, and once that threshold is closed, the whole position is liquidated immediately, and there's no care for how fast it is liquidated. As soon as you can, you just sell into whatever liquidated it is. And that can be quite problematic at times, especially when something like a liquidation cascade happens. There's no liquidity, which just drives prices further down. And yeah, the guys at Curve were like, well, what if we created something that kind of soft liquidates you? So when your collateral starts getting close to where it should be liquidated, it's already like it starts liquidating slowly. And the closer it gets to that liquidation threshold, more and more collateral is liquidated. So it's just a gradual liquidation that doesn't impact the protocol and your position as much. And yeah, it's been growing quite a lot. It crossed 100 million in circulation just recently. It grew 30% over the last month. If you look at all, like any major stables, none of them have such close growth. Not even the ones backed by liquid staking coins.
Yeah, I want to jump in here. Why do you think that a gradual liquidation hasn't been more of the norm? It seems like if I'm a new entrant to this marketplace, it seems like a gradual liquidation would help investors here. But as you're saying, it's more of a newer invention.
It absolutely would help, but it's just not easy to pull off. You know who was the last guys who were talking about soft liquidating? FTX, and it didn't go that well for them. So it's something that it's great if you have it, but it's not easy to build. And it seems I guess they have had their their first major test now, but I think CRVUSD is not big enough. So I think, we still need to keep an eye on how it handles like a big liquidation cascade in the future if the circulation of CRVUSD really grows.
Okay, so the liquidation cascade is really the outside risk that could make this feature really unworkable.
No, I think it's just the solution has been tested yet, I think. It's been working really well. Like if you look at the peg has been maintained. Couple of positions have been liquidated, but the protocol is not big enough. There's only like 500 holders for now, and I probably just Mitch and his friends. So yeah, I think you still need to wait and see for this table to like really have interest and for like a lot of people to use it. And in one of these liquidation cascades in which the whole market just kind of takes a big dump, let's see how it behaves in that situation.
Okay. Well, it's exciting. It's always exciting to see some new innovations coming to market. And then to your point, they have to be battle tested to really prove themselves out. So, okay. Any last words on CRVUSD before we move on?
Well, just something quite interesting that I saw is that 30% of their collateral is wrapped BTC, which I like. I like seeing Bitcoin used through DeFi. So, nice little tidbit.
Nice little detail. All right. Yeah. Maybe more of that to come. All right. Hopefully. Well, unfortunately, after 2 like it's, 1 spike it, and a little bit of optimism, we have to go on to yet another topic, which may bring a little doom and clouds and thunder to the show. And this one, now we're looking at the BNB token, which is not looking pretty. JJ, I want to bring you on to talk a little bit about some of the data you pulled up on BNB and some of the perpetual swaps. So tell us, what are you looking at here, and what do you think it means?
Yeah, it's not looking good. So over the past few months, obviously, we've kind of had the growing regulatory pressure on Binance, tons of rumors swirling around over kind of the severity of what's going to be coming down the pike for them. And if you look at the price of the BNB token, it certainly reflects that. So kind of one of the charts that I shared here comes from Dylan LeClaire, and he's just showing the volume profile, so the different levels at which there was tons of volume traded on BNB. And below 200, there's just kind of a large gap down to 30, where there wasn't much interest on the way up from people buying basically between $30 or so and 400 or 500, wherever its all-time high peak was. So now that it's kind of falling below all these major volume profiles, the risk of it going severely low as it kind of probes in and tries to find some range of organic demand becomes heightened. Again, this is one of those scenarios that we're just bringing up in the hopes that it doesn't manifest, but the nature of markets is you have to kind of be neurotic at all times and on the lookout for what your worst case scenario is. And obviously a scenario where BNB collapses as the FTT token did in late 2022 could provide some existential risks to Bitcoin and crypto in general. So this is definitely something to keep an eye on, in my opinion, as kind of possibly a leading indicator for Bitcoin. If we see it go much further, say below 180 from here, would not be too optimistic in the near-term projections for Bitcoin's price. And that could be one of these things that the scenarios we were talking about earlier, doomsday, Bitcoin under 10,000, this could be an event that brings that towards that end game, right? So you see the dollar move up above 104, BNB breaks down. It would seem logical for Bitcoin to eventually take out the FTX lows at that point, and maybe we do get that sub 10,000 target in that scenario. So something for sure to keep an eye on, in my opinion. Also, I'd like to add in there how much short interest is currently open on that, because it is crazy. So I think the slightest bit of relief to play kind of devil's advocate and flip that on its head is that if these DOJ charges and investigations turn out to be nothing burger, the squeeze on this would be absolutely unlike anything we've seen possibly in crypto even. So definitely not saying to go out and short it, but just keep an eye on it.
Well, a counterpoint to that would be, counterpoint to that, the point about the squeeze is that a lot of people that are shorting BNB is because they're actually holding BNB and they are using it to get tokens through the launchpad. So Binance has these launchpads and launch pools in which you stake some BNB and then you get free tokens. Basically, it's just like an airdrop. So in order to try to prop the price up, they've just been releasing launchpads like crazy. So a lot of big whales just buy a hella BNB and they want to cover their assets in case BNB actually takes a big dive, right? So they use the BNB for the launchpad and then they open a short on BNB and perpetuals. So they are not like they're a bit.
There's probably there's some directional speculation there for sure.
Yeah, for sure. Just that.
I guess it would be like the magnitude, like if they all close at the same time, right? Like all these, you could see kind of that reflexivity effect where it just goes parabolic over a very short amount of time there.
Yeah, for sure.
I'll add in that we kind of have this newer metric. It records the amount of slippage on a 1 minute candle chart and basically the amount of either buying or selling pressure that's taking place to kind of combat any of that slippage. Like it's showing some to use a very technical term here, some gnarliness over the past week in terms of the amount of slippage taking place. And somebody is stepping up whenever that does unfold on these drops, you can tell. So as soon as somebody stops stepping up and you see that slippage come back into the market, that's going to be a pretty scary indication that we're going to see some severe downside movements.
Yeah. Where's the demand on that? That's like looking at that volume profile chart. It's just not a whole lot of
I was
hope
going to
for it.
ask.
How much weight do we put in that though? Like,
I think it's like people assign whatever weight to it they want, but when you're looking at where would you buy, right? Like, well, you'd want to wait to see where there was some kind of confirmation in the market, and you don't really see there's just air gaps there.
I guess part of that, the thinking there is like, who's the buyer? Is it somebody that's using TA and kind of these volume profiles, or is it going to be somebody trying to protect something?
And what's
That somebody being CZ and his friends, right?
I was going to ask, I mean, this is an opaque token, right? I mean, we don't have a lot of visibility into its mechanics.
I think the template you have is the FTX breakdown in the way that FTX and Crypto.com and also Binance use and OKX and Huobi, the way they use their native token as a collateralized asset for themselves, and also for people that were staking or, building projects on their network. So the road to an implosion is there. It's just how do they avert it, or what is the catalyst that sets that off? But it seems inevitable, to be honest. And I saw something, I don't know if it's worth discussing, but there's a few people out there saying that, Binance possibly pledges held BTC as collateral to then buy and prop up BNB, and what happens when all that unravels. But that could be a tinfoil hat theory, but wasn't FTX doing something quite similar to that?
They did buy a bunch back in March. I'm not sure. I remember CZ coming out and saying, hey, we put a bunch of our stables into Bitcoin, made like some formal announcement about that. So I'm sure there's a good deal of rehypothecation there. And yeah, it could be a Pandora's box type scenario if things unwind.
Boy, okay. I think at this point we've painted this show about as dark and black and bearish as possible. And it sounds like something to continue to monitor, but it's Ray, you kind of alluded to, there's probably some theories out there that maybe not quite tinfoil hat, but we just don't have enough information. So it looks like we want to continue to watch the price action on BNB, look at some of the activity, and keep our fingers crossed that it continues to stay somewhat stable, because look out below, it doesn't look very pretty. All right, but let's move on to something a little bit more optimistic. What everyone's talking about in the last week and a half, friend.tech. Everybody excited to talk about their favorite accounts on Twitter? All right, so I'm going to be asking the guys who they would actually invest in. I'm not sure anybody actually has, but I'm curious to hear if you had to make a choice, what you would actually go out there and invest in for friend.tech. Cody, I'm going to start with you because I know you spent so much time on Twitter. Which accounts would you look at? I'm guessing it may be related to Chelsea if you had an opportunity, but tell me, which Twitter accounts would you be looking at?
I think I would have to go with Sam. I don't know if everyone will know him, but like he's gotten pretty famous, like on crypto Twitter. Like he's the guy that like made DeFi Kingdoms popular and whatnot. He's a big Solana bull right now, and the guy is just really entertaining. Like I think by the end of this, however this ends, like I think he's gonna be like proper famous.
Proper famous.
So, yeah.
Sorry, can you the handle again? Who is this?
BLK Noise 06.
Okay, so it's easy to pronounce and remember. Got it. Okay,
Super easy. Yeah,
super easy. Barely an inconvenience. JJ, who do you have if you have to invest on friend.tech?
I would take Inverse Bra.
Inverse Bra.
Yeah, for the memes, the laughs.
All right,
Not
I like
so much
that.
alpha, but it's funny.
Okay, make you chuckle. Ben.
I'll do myself so I don't lose money.
Oh, I love that. Invest in yourself, because who else will?
Because I won't be on there.
Okay.
And you get one free share.
Yeah, that's right.
Here we go.
Trap tokens. Ray, how about you?
Or they call them keys now. I'm going with Ben. I'm going to bet on myself for a variety of selfish reasons and some, like self-challenges that I've set out for myself. So I would bet on myself. But my strategy when I first downloaded the platform was to go and look at who was not on it yet, and then find a way to set an alarm to let me know when they got on so I could buy their shares when they were cheap. So I looked for a lot of people who are prominent like Twitter people, but who had not yet got on it. So, for example, like Scott Melker or Cantorin Clark or Michael Vanderpop, Bitcoiners are kind of slow to get to tech that's not built on Bitcoin. So I looked at some of those names because maybe eventually they would hop on, and then I would buy their shares for cheap. The shares are obviously going to surge because of MEV bots and sniping bots and other clever traders, on-chain based traders. So I would sell all those into profit, but I have not done any of that.
You haven't actually pulled the trigger. Why not? Have they not actually made it to the platform?
Yeah, they weren't on there, and I've been around this block a lot of times, and I'm in this place in my life now where it's, for me, I know it sounds crazy, only Bitcoin. Bitcoin's so cheap right now, and we've got the halving coming up. So why would I waste my hard-earned money on gambling and speculating when I can just buy Bitcoin? Because I've been around the block and speculated, and when I got wrecked or lost money or didn't sell in time, I'm left here sitting, wondering, like doing the math. Here's how many Bitcoin I could have. Here's how many ETH I could have. So at this point, I guess I have low testosterone or something as an investor, and I'm just keeping it safe with Bitcoin.
Keeping it real.
Is that the new handle, low T?
Low T.
It might as well be.
Oh, man. That's perfect. Ben, you mentioned, I kind of want to open it up to the group and just get your general thoughts on the platform. But Ben, I want to start with you. You mentioned you're definitely not going to get on there. And I know we had some chats on the Discord kind of going back and forth on it. But what are your thoughts there? When you see this tech coming out, what's your initial reaction? And then as you dive into it, what else do you think?
I think I have similar sentiment as Ray. Like, I've kind of been in the space for long enough where a lot of these kind of gambling like ventures where you go ahead, you download the app, you transfer some capital, you experiment, it's fun. That's the part that I really loved about DeFi Summer, what feels like eons ago. It's fun. And, there's not like a lot of innovation, and friend.tech does seem like it has some of that, but it's time. Like, time is so valuable nowadays, and we spend so much building all the products that we want to launch that, is that time going to be worth it? For me personally, it's not. And I have enough conviction on what Bitcoin's doing that I can sit there and be able to accomplish what I want to accomplish in this coming cycle. That's not really on my radar. But one thing I would like to say is that it's really hard for an Anon team to build. Like, these guys are Anon. We have to think about it. It might not be because they're scammers or trying to rug pull as all of this discussion and rumors about what's happening with friend.tech that we don't really know. But to build in this space as an Anon is difficult. You have to have some social reputation behind you with sort of years of experience to have that trust from the community to go ahead, ape in your product and feel confident. And I think a lot of that has to do with the lack of a good regulatory sandbox to build and create. I don't think these guys want to be Anon if they're not scammers or ruggers, right? They want to build a good product. They want to be known. And if it not for the regulatory landscape, I think they would go ahead and do it. And I think we would all feel a lot more comfortable to go ahead and deploy larger sums of capital even and experiment at a greater capacity.
That's an interesting perspective on the lack of regulatory clarity and a non-development.
But there's been good products that have been built by Anon, like GMX. That's a great product. And that's a fully Anon team. They're scared. And if there was a regulatory sandbox, imagine how great GMX as a protocol could be.
Sure. Absolutely. Cody, I want to ask you specifically, you had mentioned during the discussion on Barcelona and what they're doing with Web3, kind of this thought that this was, friend.tech was maybe another instance that we're going to see in terms of people buying into reputation and having fun doing some gambling or speculation on it. Is that how you see it? How do you see friend.tech as a technology?
I mean, I like the app. Like, I think the app is really good in the sense that it has abstracted away a lot of the pains of crypto apps. Like, it doesn't feel like a crypto app as any other. Like, it just, I don't know, you don't have to bridge, you don't have to do basically anything. You just sign up, and it's similar to other Web2 apps that you would use. If you ask me if I like the financialization of like people and like tokenizing people in a sense, I'm not a big fan. I just don't know if I can do anything to stop that from happening, right? So I think it's going to happen eventually. It's not going to be everyone. Like, I think that's not going to happen like everyone, like in a Black Mirror style, like you're kind of like rating everyone you meet on the street and whatnot. But I think gambling directly on the success of like celebrities and like football players, basketball players, and all athletes. I think that's coming, and I think you can see it on friend.tech.
And we've been tokenizing individuals almost for 6-7 years now, haven't we? Experiment wise, like that gentleman Alex, I don't know, his token is ALEX Alex, and he's gone on to build, I think, Showcase.xyz. But he tokenized himself.
Yeah.
I think that was 6 years ago.
Yeah, Cody, to your point, it does seem inevitable. I mean, I don't like the Kardashians, but they took over, so I couldn't stop them.
I love the idea of it, but it just seems like one of those things where the unintended consequences kind of ruin the use case over the long term. You just see how it would turn into something nefarious or just weird.
Dystopian.
Yeah.
Definitely.
Like you like, not to pump our show, but just like the type of people that are successful on YouTube, I don't know anybody that actually really watches it, right? Like there's some kind of like game to it all that just isn't, it's disingenuous.
You got to want the spotlight, and you got to want it to stay on you. And those are the individuals that this is going to really, or who will excel. I mean, it's the influencer model.
Yeah.
Like,
It's
on
like
steroids.
politicians, like the type of people who get to office and stuff. Like it's usually the worst people that crave for that kind of attention and spotlight. And it just seems like another one of those things where it draws in kind of the worst parts of humanity come out anytime you financialize these things.
JJ, I don't know what you mean by that. All the politicians I follow are humble, well-spoken, well-dressed, and just absolutely respectful. Ray, you had some comment to kind of wrap up our discussion on friend.tech.
Yeah, I can do it in a minute. And I feel positive about the platform, at least optimistic. I'm not positive about its lifespan, but I'm working hard to grow my brand and to monetize my analysis in my brain, and to access some of the perks of being known in this space. And even with my current job and time spent in this sector, it's not easy. So I view friend.tech as infrastructure that's plug and play. It has product to market fit. It has market share. It has mind share right now. So why shouldn't I give it a go? The worst I can do is ignore it by writing it off as a scam, or give it a go and not reach my personal objectives. Now, is profiting off your friends and followers and the solitary reason for friends and followers engaging with you and your shares or your keys is for either profit or the hope of an airdrop? That's a big issue. And I think it's because it's insular capital within that ecosystem, and it's primarily speculation driven. And by insular, I mean like influencers and market makers provide the initial liquidity. And then as the platform takes off, new and larger and more expensive retail capital rolls in. Influencers and insiders typically like sell into that volume. Is that the case with friend.tech? I don't see it yet, according to the data dashboards that I've seen on Dune. And sure, we heard that Paradigm has participated in a seed fund, and that was followed by like this euphoric inflow of new account generation and speculation on the platform. Yes, there's going to be 100 million tokens, which are airdropped in tranches every Friday, and that might doom or cause some problems for the project. But I like it because the infrastructure provides, I think, a seamless layer for like branding and engagement and perks and creating discounts and gated content and shareholder profit sharing and other features that like creators and personalities can use to entice and retain their community. So the base concept is solid, even though it's not novel. And if they don't rug, and if they don't lose their money to like future competitors, and if they're not forced to drop a token by Paradigm who then dumps and dilutes everyone, then I'm excited about the platform. So everything's said with kind of a caveat, isn't it?
It is. But
The chance is just 10x on a token drop coming.
Yeah. And you know what? In this instance, that's not my interest. And that wasn't my interest with Arkham, and that wasn't my interest with using Arbitrum for a year and a half before they did the airdrop. So while I know it's there, I view it more as an incentive for people who buy my shares to continue trading or buying those shares or speculating on them, because they want the airdrop and they're farming it. But I hope during that limited window, that 15 minutes of fame that, content creators might get on friend.tech, if they allow you to start, importing images and audio and video and all that, I hope that within that short time span that I have, my shareholders' attention, that I can make some impact that, is lasting within that platform. Or if that platform rugs or blows up, maybe those people now know me and will follow me elsewhere. So I think it's, it's an opportunity. It's already made. It's made like it's infrastructure. It's a tool. It's an instrument that I can try. So I like it in that regard.
I think that's a great optimistic way to end this. I will say, Ray, that was 3 minutes, not one. I'm going to start calling you 3 minute, 1 minute Ray.
Sorry.
Oh, there's always a lot to share. No, I think that's good. There is a native skepticism for a lot of people when it comes to technology. And specifically, if you have anonymous builders, Ben, you just commented on that. And I think it's easy to sort of downplay the opportunities there and also be negative. I think it's good, Ray, to your point, to think about what are the opportunities for individuals like yourself or others that are looking to build. And so we got to keep that in mind with all the skepticism that we may have and with the unknowns, because no matter what you build, there's unknowns. JJ, you talked about unintended consequences. So, but with that said, that's going to do it for this week's show. Wow, we packed in a lot today. I want to thank JJ, Ben Lilly, Ray, and Cody for coming on, sharing your insights. I always get so much out of this. I feel like I get more than you guys, so I really appreciate it. If you're out there and you got something out of today's show, please hit the like and subscribe button. And if it's too hard, you can't wait till next week. I get it. I'm the same way. That's why I'm on Twitter communicating with these guys and hearing their thoughts, and that's where they're sharing their ideas. And there's probably going to be more outlets coming in the days to follow. I mentioned that I was going to do an update on the video. It just continues to be the saga. I feel like it's going to eventually come, but we did run a test, and the test basically told us that we have to get some more hardware. I'm hoping that in the next couple of weeks, we're going to be able to bring this live so you guys can actually see the charts. You can actually see the data, and you can see our avatars, which are something we're all excited to share with you all. But until then, you're just going to have to wait. You're going to have to listen to our pretty voices. But that's going to do it for this week. I think if there's one message I'm going to share with all of you, these are uncertain times. A lot of unpredictable stuff's happening right there. So if you're out in the crypto world, if you're out in the macro world, you're out in the real world, be careful, be safe, keep some dry powder, be ready for when the market's going to change. And I'll get off my soapbox. This is Marconi White. I'm signing off. Be good.